The US and China have agreed to take down the taxes they both put on each other's countries. What does it mean to you? We also need to use some important new metrics to figure out how fast the economy is growing. You need to know this and always be ready for what's going to happen. So we did learn yesterday that the US and China have agreed to a trade deal. We learned something new today about what is actually in the deal. Okay, here it is. What was made public? Both the US and China have stated that the tariffs they put on each other after President Trump's first round of escalation earlier this year will be lowered. As part of the deal, both countries will get rid of some taxes and put others on hold for 90 days, starting on May 14th. As a result, the US has put more taxes on goods from China. That is, the extra taxes put in place during the recent standoffs will go down from 145% to 30%. That's great news that it's 115% down. While China's tariffs on some US goods went from 125% to just 10% after being raised lately. It will be better for US companies that make things in the US and send them to China from the US through this. Chinese people will find it easy to buy things in the US, but when China brings goods into or out of our country and we pay for them, we'll still have this 30% on most things. I'll show you what those things are in a moment. China has also stopped and canceled other non-tariff countermeasures like sending important minerals to the US, which were put in place after the first round of escalation. That means that China told the US, you know what? We're not going to give you any rare earth materials or critical minerals, and that has been lifted as well. There is still an extra 20% in the US steps that are meant to put pressure on Beijing to do more to stop the illegal trade in fentanyl. That is exactly what needs to be done because most of the world's fencing comes from China. The news came after talks between the two countries in Switzerland. America and China haven't had a trade deal since Trump started the last trade war. It says this and that to give you some extra information. This is the mood check. When were US taxes on China this high last? The S&P was down 200 points. 4 rate cuts from the Fed were planned for 2025. Not long ago, the Fed said they wouldn't be cutting rates any further this year, and Wall Street wanted the economy to go down. And you can see that the economy has been going up and down like a roller coaster, which is much better. We went from 10% to 20% to 54 to 104 to 145, and now we're back to 30%. Then we did talk a little about what was going to happen. The 30% change made me want to see what kinds of things will be affected. That being said, here is some of the information I already gave you about what price cuts are coming. The goods that are touched by the 30% scope of goods are next. The 30% tariffs cover a wide range of Chinese goods that are brought into the US, such as technology, clothing, machinery, consumer goods, and more. There are still some taxes in place like 25% tariffs on steel, aluminum, and cars. A 20% tariff was put on goods that were directly linked to concerns about fentanyl. That's really great. The deal doesn't bring back the de minimis except for the exemption for low-value packages from China. This means that small shipments are still subject to tariffs. I guess smaller packages weren't priced that way before, but they still are now. It says that goods from Canada and Mexico that are covered by USMCA, formerly NAFTA, are not subject to those duties, which is good. Some tariffs that were put in place before, like those under certain executive orders, have been lifted. However, duties under Sections 301 and 232 still apply. That's his effect on the company's bottom line. For consumer goods companies, the profit margin can be anywhere from 40% to 50%. A 30% tariff cuts these earnings by a large amount. In other words, most of these things come from China. Some of them have very low profits, while others can make as much as 40 to 50%. If your price is 30% and your profit is 40%, that will take away from your business and leave you with only 10%. Due to this, most of the things you still buy from China will have to have their prices raised. This doesn't get rid of what was there before. Some of these taxes will still be in place, which will hurt some American businesses and of course some of the things we buy every day. I hope that this kind of thing ends eventually, but we'll have to wait and see. It's also worth looking at because the US is trying to change most of its trade deals. The US deals with 10 major countries. What are the 10 most important goods that come from those countries? That's what I wanted to know and understand the most. So this is a list of the most important countries based on how much trade they have. Places 1 and 2 are Mexico and Canada. China actually has 3. I hope that the US can make a deal with both Mexico and Canada so that we can move on from this crazy time. Japan, South Korea, Taiwan, Vietnam, the UK on another deal they've been working on, and India are also on the list. Mexico is one reason why it's so important. is the United States' most important trading partner because it is close to the USMCA trade agreement and has a strong supply chain integration in agriculture and electronics for cars. Mexico has been the US's biggest importer since 2023, passing China. Canada has been a trade partner for a long time, and its energy and auto manufacturing sectors are highly integrated with the US's. The USMCA supports seamless trade, especially in oil and vehicles. China comes in second, followed by Germany, Japan, and electronics, machinery, and consumer goods. You basically have cars, machinery, and high-tech goods that help US manufacturers sell their goods to consumers. Taipei, Vietnam, and South Korea. The fact that the US relies on Asian tech supply lines is shown by the fact that we import electronics, semiconductors, and consumer goods from those countries. That's the main reason we want to make some of these chips in the US with the help of the CHIPS Act that the Biden administration put in place. There's also the UK and India, a lot for trade in different kinds of goods like medicines, tools, and other things. All of these goods were also put in order, which is the most important thing for these countries. This is a lot of what I've already talked about with you, but there are still some things we didn't cover, like crude oil, medicines, mineral fuels, wood, metal, and many other very important things. So all of these goods, those you see on your screen, would cost at least 25% more in the future if a trade deal isn't made between Mexico, Canada, Germany, Japan, South Korea, Taiwan, Vietnam, and India. It would be great if new deals could be made and taxes were not put in place, but we don't know what Trump wants here. Just know that I'll let you know when we find out more. Out of the 100 trade deals they wanted to change, they have only done 2 so far. Okay, so that's China and the UK. It also talks about any other things like cars and parts. Electronics include things like computers, cell phones, and semiconductors. This is a little more of what we've already talked about. I also wanted to look at the S&P 500, which had a great day today. The stock market may have gained more than $2 trillion today. People are buying stocks right now, but hedge funds and other big businesses are selling them. The things that Wall Street and NN is doing are different from what Main Street is doing. Main Street is where small businesses are. Wall Street is what rules things. That means that stores are still helping the markets, which is important. The markets might go against us if we can't make some of these agreements. And that's why trade deals are so important. That's also why the markets start to rise when there's good news about a trade deal. So US production is slowing down. You should keep an eye on this because it will tell you if American businesses are going to lay off workers. These are some of the things I'm going to talk about with you. So in April, the Philadelphia Fed Manufacturing Index fell 38.9 points to -26.4, which was the lowest level since April 2023. Also, this is the second lowest number since 2020 when it was CO. The number of new sales dropped 42.9 points to -30.4, which is the lowest level since April 2020. This big of a drop in new sales has never happened before, not even during hard times. They're saying that this kind of data is unheard of outside of the US going into or already being in a recession. This means that the data is terrible, which means that US companies aren't making as much as they used to, 42.9 points less. Okay, the prices paid measure went up to 51 points, which is the highest level since July 2022. More proof that there is stagflation. Then there's the fact that the world's debt rose to a record $324 trillion in the first quarter of 2025, from $7.5 trillion in the past. The total debt reached a record high of 106 trillion won, with 50% of the rise coming from